Based on the closing prices today, May 19th, 2025, there was no measurable reaction in the stock and bond markets that could be tied directly to Moody's downgrading U.S. debt one notch from AAA. S&P downgraded U.S. debt in 2011, and Moody's should have done so then as well, in my opinion. As I said in a comment to my blog earlier this morning, I view the downgrade as a non-event. I doubt that any of the large institutional investors that actually move the market viewed the U.S. debt as AAA anyways. The rise in gold's price today makes some sense to me in that I view gold as an alternative to fiat currencies like the US dollar, which can be manufactured by the Fed at will and in massive quantities. When I sometimes look at the growth in the M2 money supply, the word confetti sometimes pops into my brain uninvited. If you want something to worry about, it is not the US debt rating. That will be something to worry about way down the road, maybe in 10 or 15 years or so. There will be more downgrades in the U.S. debt, but that is now out of sight, out of mind for at least a few years or until there is a U.S. debt default resulting from a failure to raise the debt ceiling, and that could happen at any time. There have already been several close calls. One possible event that could kneecap the stock market is Trump restarting the tariff war, and that is something to be concerned about. The Secretary of the Treasury said that the reciprocal tariffs will return unless all foreign countries come to terms on new trade deals prior to the 90-day pause, which would be in about a month or so, as I recall. Is that just a negotiating tactic designed to threaten foreign countries into submission, with Trump only trying to get whatever he can without actually having to carry through with the threats, or will he actually implement the same reciprocal tariffs again that precipitated a stock market meltdown in early April? And the recovery the next time may not happen over a short period of time. It may be one that will be difficult to overcome for both the economy and the stock market. A proper analysis of Trump's personality, which is well known to everyone familiar with him by now, although some refuse to recognize the obvious traits, suggests that he will carry through with reciprocal tariffs if foreign countries refuse to bend a knee to him and kiss his ring. The foreign countries who have not yet retaliated, and many of them have not, will have no choice then but to retaliate, since that would be their only option, and then we will be in a big mess. Time will tell what Trump will do, but his personality suggests, and several traits in his personality suggest that he will carry through, and I'm referring primarily to his impulsiveness, his ignorance of what the consequences would be, his basic immaturity, and most important of all, his complete intolerance for any opposition to what he wants to do. And that last trait in particular would suggest that the most likely outcome would be that he would reignite the trade war as early as July. As a side note, just to highlight just how intolerant Trump is and how he will not brook opposition of any kind. The acting administrator of FEMA was just fired one day after testifying before Congress that FEMA should not be eliminated. Total submission is required for anyone to keep their job either as a Republican politician or nonpartisan federal workers. There is some prior evidence that supports what I think is the more likely outcome if foreign countries do not kiss his ring. And that is what happened when Trump started a trade war with China in 2018. I summarized the details of that trade war in a comment to a recent blog post and will simply repeat that chronology here. The tariff war started with the U.S. imposing in January 2018 a 30% tariff on solar panels, and China responded in April with tariffs on a roughly equal dollar value of U.S. exports. It was about $3 billion, which included 15% duties on fruits, nuts, wine, and steel pipes, and a 25% tariff tax on U.S. shipments of pork and several other products. In other words, they didn't respond in kind. They just picked products that they believed would hurt Trump's base the most. In April 2018, the U.S. Under Trump accelerated the tariff war with 25% tariff taxes on about $50 billion in China's exports, and China responded with 25% tariffs on a variety of U.S. exports, including soybeans. This led to U.S. farmers permanently losing export market share to China as a result. That has never recovered. In late summer 2018, Trump imposed a 10% tariff on $200 billion in China's exports, and that acceleration produced close to a 300-point drop in the S&P, starting in September from the September high of 2018 near 2930. The market stabilized and started to turn back up in November 2018, with the S&P gaining close to 100 points from the low. In December, Trump was not happy with the progress being made in the China negotiations, so he accelerated the trade war by raising tariffs on $200 billion of China's exports from 10 to 25%. Which caused a temporary spike in the VIX into the high 20s and almost resulted in what I call a trigger event. It was a very close call as to whether one actually happened as a result of what Trump was doing on trade. I may have discounted at the time 2 or 3 closes barely above 25 in the VIX, given the small number of higher closes at that time. The S&P 500 retreated quickly back down to 2460 as the VIX spiked much higher. As I recall, there was news in late December 2018, about almost a year after Trump started this war, about a trade deal, and the market quickly rebounded back higher than 2030 by May of 2019. So it took about 4 or 5 months to recover the prior high. Now the trade war is being waged against China and everybody else in the world simultaneously. The stock jocks are just too complacent that everything is going to be worked out by Donald just fine before serious damage and even lasting damage is done to the U.S. economy, U.S. farmers, world economy, and virtually anyone that has any connection whatsoever with international trade.